I'm Zane Stevens, the founder of Protea Financial, and today we're talking about bookkeeping mistakes we see most often, why they matter, and how you can avoid them before they become costly problems for your business. Many people think bookkeeping is just a compliance task. Too many people think bookkeeping is just a compliance task. It's a tick-the-box exercise that you can just rush through and hope for the best. When done correctly, good bookkeeping gives you great information to make really good decisions. When we get a hold of a new set of books, there are certain mistakes that we consistently see that could easily be avoided. Give the business better decision-making power. Give the business better financials and allow them to make better decisions. Today, I'm going to talk through these mistakes and how you can avoid them. One of the biggest mistakes we see is commingling of personal and business finances. This is by far the most common mistake. A lot of the time we get started with our business, run it through our own personal bank account, and all of a sudden it becomes a confusing mess that you'll have to untie in the future. It is also one of the mistakes that creates the biggest headache when it comes to cleanup, and one of the ones that can create the most time required to get the books in good order. Using personal cards for business expenses and vice versa, it doesn't just create clutter in your books, it threatens legal protection and creates unnecessary work. I highly recommend every business, as one of their first steps, sets up a business bank account where the transactions can go run through it. And if you have that personal credit card that you like to use, get a separate card that you use just for business purposes. Make a mark on it so that it's spotted, that you can spot it in your wallet and use it religiously to make sure that expenses are separated from personal expenses. It is critical that we always maintain strict separation, business and business accounts, personal and personal accounts. If you must move more money between business and personal, record it formally as owner's contribution or draws or loans to the business. This is a good practice for a good set of clean books that are easy to use to run your business successfully. Additionally, books that have a lot of personal expenses make it very difficult when it comes to the exit strategy because it creates extra complexity when trying to sell. Mistake number 2. Treating capital assets as immediate expenses. A lot of people want to expense everything. This is because most people are thinking about their tax liability and how do they pay the least possible taxes. This could make sense, but there are rules in terms of what should be capitalized. Big purchases, like equipment, are not expenses in the normal sense. These are assets with useful lives. Expensing them immediately distorts your profit and violates some accounting principles. Capitalize these important assets because there is value in them. It's important to keep track of them. And if you are trying to exit, having a record of what assets you have shows the worth of your business. As a business owner, you should be considering setting capitalization thresholds. We generally recommend $2,500. Setting in depreciation policies for these larger items. These can be set up by your accountant or by your tax professional, and always have discussions with key stakeholders like banks, especially when it's been financed. They want to be able to have visibility of what their money is being used for, and capitalizing assets will give you a true reflection of the profit of your business as long as depreciation is recorded accurately. Capitalize those assets, depreciate them over their useful life, and have better, stronger financials to make good decisions. Mistake number 3 is relying only on the bank feed. We talked about cash being critical for staying in business, and this is true. Doing pure cash accounting is convenient, and a lot of time it is the easiest thing for a business owner to understand. But it isn't the whole story. There's a disconnect, potentially duplicate entries, and at times you don't catch unclear transactions. The bank feed is initial import. You do need a monthly reconciliation, and you should always match the statements. Consider also raising bills as well as invoices to customers so you can track what you need to pay and who needs to pay you, and allow you for a good process to follow up. It is critical that every business reconciles their bank account and credit card statements on a monthly basis to ensure the completeness and accuracy of their financial statements. Reconcile your books every month. This is the only reliable way to confirm your books match reality. Mistake number 4, business owners ignore the balance sheet. Too many owners live and die by the profit and loss statement, missing the bigger picture. The balance sheet gives you information about your assets, your liabilities, and a clear indication of the financial health of your business. It's important that the balance sheet gets reconciled on a monthly basis and you take time to review it for accuracy and completeness. Focus on your AR, what's going on there, are all payments being correctly processed? Is there anything that you need to be following up on? Are there customers that you need to have conversations about maybe going to COD terms? Look at your inventory numbers. Your inventory is an important asset in your business. It is the cost of the items that you're trying to sell and gives you an indication of your gross margin per product. Making sure that you have accurate records of your inventory and reflecting those true values gives you a clearer picture of your performance. Recording liabilities is critical. It's important to know who you owe money and how much, and what sort of length of time that those liabilities will be paid over. Having a complete picture of the debt you owe people allows you to make better decisions, especially around cash flow. Reconcile your balance sheet monthly, review it for accuracy, and make sure you understand who owes you what and who do you owe what. The balance sheet will allow you to make better cash flow decisions. Mistake number 5, payroll misclassifications. Your people are really important to you, and paying them on time is a critical process within the life of a business owner. With that being said, it is also very important that we record payroll accurately so we understand how much we've paid to those individuals and how that affects our profit and loss. Getting payroll correct is important because it keeps your employees happy, gives you accurate financial records, and keeps you out of trouble with various authorities. Payroll isn't simple and it is highly regulated. We recommend using a professional company that will allow you to pay people correctly and on time, and will assist you with filing all the required documentation that needs to go with each payroll, as well as your quarterly filings and your annual filings. We personally recommend Gusto, as well as QuickBooks Payroll, but there are many other providers out there that can do a great job. Getting payroll wrong can leave you in a really bad situation that could lead to penalties, interest, and potentially be the end of your business. Mistake number 6, misclassifications. Sometimes when we're doing our books ourselves, we just rush through it and just take the suggestion that the accounting software is giving us. This is short-sighted because it can leave you with a situation where your books are all over the place with transactions going to different accounts on a monthly basis. A misclassified P&L and balance sheet can make it very hard to assess what is going on in your financial statements and make good, clear decisions. Take the time to allocate transactions to the right accounts to give you a clear picture so you can make better decisions. Bookkeeping is not a compliance task. It is a fundamental part of running a good business. Having a good set of financial statements allows you to assess where your business is, where it's going, and allows you and provides you with information to make better decisions. At Protea Financial, we recommend everybody work with a professional, either hiring an accountant onto your team or working with an outsourced partner like us. These professionals are set up with the right knowledge to help you allocate your transactions correctly, separate your business and personal expenses, and give you a good set of financials that are reconciled on a regular basis. With this information in hand, you can make better decisions and give yourself a better chance of being successful. Clean up your process or partner with a trusted advisor who can help you make your books a strength, not a liability. Thank you for watching. If you want tools, templates, or expert help with your bookkeeping, visit proteafinancial.com or connect with us on LinkedIn. I'm Zane Stevens. Until next time.